This is Zimbabwe, a landlocked country in southern Africa. The country has massive mineral reserves. From high-value minerals like lithium and chrome to basics like coal, Zimbabwe has it all. Our next story is from Africa, from Zimbabwe in the south. The country is planning a railway overhaul and it has decided to go to China for help.
A $55 million deal just reshaped Zimbabwe-China relations, signaling deeper ties in trade, development, and diplomacy. Alongside a $6.9 million food aid package, this move positions China as a critical partner in Zimbabwe's future. But what does this agreement really mean for the region and its people? Background of Zimbabwe-China relations. The relationship between Zimbabwe and China has long been framed as an all-weather friendship, reflecting decades of cooperation dating back to the liberation struggle. Beijing supported Zimbabwe during its fight for independence in the 1970s and has since played a major role in shaping its infrastructure, mining, and energy projects. Over the years, China became Zimbabwe's largest trading partner outside Africa, with bilateral trade volumes steadily increasing. This partnership intensified after Zimbabwe adopted its Look East policy in the early 2000s, shifting focus from Western nations due to sanctions and strained relations with Europe and the United States. China has invested heavily in power generation plants, road networks, and agricultural projects, strengthening its economic footprint. Beyond economics, the relationship also includes military training, education exchanges, and diplomatic support at international platforms. The recent $55 million deal represents a continuation of this trajectory, reinforcing China's role as a strategic ally while providing Zimbabwe with much-needed financial and technical backing in a time of economic recovery.
But it's one thing to have mineral wealth and another to be able to profit from it. Zimbabwe has been struggling with that second part.
Details of the $55 million agreement. The recently signed $55 million agreement between Zimbabwe and China is officially classified as an economic and technical cooperation agreement, also known as ETCA. Valued at 400 million renminbi, the deal was signed in the presence of President Emerson Mnangagwa and senior Chinese representatives. According to government statements, the funds will be directed toward development programs and infrastructure upgrades, although the exact projects have not yet been specified. This agreement is not a loan, but rather grant-based assistance, meaning Zimbabwe will not shoulder repayment obligations. It provides flexibility for future allocations to key areas such as transportation networks, energy facilities, and public sector modernization. The signing ceremony highlighted mutual commitment, with leaders from both sides emphasizing the need to strengthen ties in the face of shifting global economic landscapes. For Zimbabwe, the financial injection represents a much-needed boost to its struggling economy, while for China, it consolidates influence in southern Africa, a region of growing geopolitical importance.
Take this report from last month. It talks about Zimbabwe's coal industry and how it suffers due to poor railway infrastructure. Coal companies are sitting on large stockpiles and they cannot move them.
Nature of the deal: economic and technical cooperation. The $55 million package is structured as an economic and technical cooperation agreement, focusing on grant-based support rather than traditional trade or loan arrangements. Unlike bilateral trade deals that prioritize imports and exports, this cooperation model emphasizes capacity building, infrastructure enhancement, and technology transfer. Such agreements are designed to improve institutional frameworks, technical expertise, and economic resilience in developing countries. For Zimbabwe, the deal could support initiatives such as renewable energy expansion, agricultural modernization, digital transformation, and public service efficiency. This cooperation reflects China's broader approach to Africa, where development assistance is often intertwined with strengthening long-term political and economic influence. Importantly, the agreement provides Zimbabwe with resources that do not increase its debt burden, which has been a recurring challenge with international financial institutions. By aligning with Zimbabwe's National Development Strategy 1, also known as NDS 1, the deal positions China as a partner in long-term sustainable growth rather than short-term financial relief, showcasing the multidimensional nature of this bilateral engagement. Additional $6.9 million food aid package. Alongside the main $55 million agreement, China also extended an additional $6.9 million food aid package, reflecting humanitarian support for Zimbabwe. This assistance, valued at 50 million RMB, will be delivered in the form of white rice, aimed at addressing food insecurity challenges worsened by droughts, climate change, and economic instability. Zimbabwe has struggled with inconsistent agricultural outputs due to erratic rainfall patterns and reliance on maize production, making this food aid critical for vulnerable communities. Government officials emphasize that the rice donations would prioritize low-income households, schools, and regions hit hardest by food shortages. Beyond immediate relief, the food aid also carries symbolic weight. It demonstrates China's willingness to assist Zimbabwe not just in large-scale projects, but also in addressing urgent humanitarian needs. Such gestures reinforce bilateral goodwill and help Beijing strengthen its soft power influence across Africa. For Zimbabwe, the support arrives at a critical moment when household food security remains a pressing concern. Significance of the timing of the agreement. The timing of the $55 million deal is particularly significant for Zimbabwe's domestic and international standing. Coming in August 2025, it coincides with the nation's push to stabilize its fragile economy and build momentum ahead of the next stages of its national development strategy. With economic pressures from inflation, foreign currency shortages, and declining agricultural outputs, the agreement provides both financial relief and diplomatic validation. For China, the timing underscores its commitment to expanding influence in southern Africa at a moment when global powers are competing for stronger ties with African nations. The deal also arrives as Zimbabwe continues to face challenges in accessing financing from Western institutions, making Chinese support even more critical. Furthermore, the signing reinforces President Mnangagwa's narrative of Zimbabwe's economic re-engagement, giving the government a public relations boost. The timing reflects a careful alignment of political, economic, and strategic considerations, making this agreement more than just a financial transaction. It's a calculated step in shaping Zimbabwe's future trajectory. Statements from Zimbabwean leadership. Zimbabwean leadership, led by President Emerson Mnangagwa, emphasized that the $55 million agreement with China represents a milestone in the country's long-term development agenda. In his remarks during the signing ceremony, Mnangagwa highlighted China's role as an all-weather friend, noting that Beijing's consistent support continues to provide tangible relief in areas where Zimbabwe faces international isolation. He stressed that the grant would directly align with the government's priority to modernize infrastructure, strengthen public services, and advance economic stability. Senior officials also pointed out that such partnerships reinforce Zimbabwe's sovereignty, allowing the nation to secure resources without depending on traditional Western financial institutions that often impose strict conditionalities. By framing the deal as a product of mutual respect and shared vision, Mnangagwa positioned China as a reliable ally that complements Zimbabwe's Look East policy. His statements framed the cooperation not just as financial aid, but as a strategic partnership that places Zimbabwe in a stronger position to pursue long-term growth. Statements from Chinese officials. Chinese representatives described the $55 million agreement as a continuation of their country's deepening relationship with Zimbabwe. Speaking during the signing, Chinese diplomats emphasized the principles of mutual benefit, non-interference, and sustainable cooperation, positioning the deal as a testament to Beijing's commitment to Africa's economic transformation. Officials highlighted Zimbabwe's strategic importance in southern Africa, citing its potential as a hub for regional trade, mineral wealth, and agricultural development. They reiterated that the grant-based structure reflects China's intention to help Zimbabwe without adding to its debt burden, distinguishing it from conventional lending practices. Additionally, Chinese leaders referenced the broader Belt and Road Initiative, also known as BRI, framing Zimbabwe's involvement as part of a continental push to expand infrastructure connectivity and trade routes. By stressing values such as solidarity, partnership, and trust, Beijing projected this agreement as more than just a financial transaction. It was portrayed as a cornerstone of China-Africa relations that symbolizes long-term strategic alignment between the two nations. How this deal fits into Zimbabwe's development goals. The $55 million cooperation deal aligns directly with Zimbabwe's National Development Strategy 1, which outlines economic priorities through 2025. NDS-1 emphasizes critical areas such as infrastructure, digital transformation, energy generation, and agricultural resilience. all of which could benefit from Chinese support. Zimbabwe's government has been seeking external partnerships that bring in resources without worsening its foreign debt crisis, and this grant-based assistance perfectly complements that objective. The agreement also supports the nation's vision of achieving upper middle income status by 2030, often referred to as Vision 2030. By leveraging Chinese funding and expertise, Zimbabwe can accelerate projects that are otherwise slowed by budgetary constraints. Additionally, the deal strengthens the government's re-engagement strategy, which aims to restore global confidence in Zimbabwe's economy after years of sanctions and financial isolation. Positioned within this framework, the agreement is not an isolated gesture. It's a building block in Zimbabwe's broader mission to transform its economic structure, improve living standards, and secure sustainable growth. Potential sectors benefiting from the agreement. The $55 million package has the potential to benefit multiple sectors across Zimbabwe's economy. Infrastructure development is expected to be a primary focus, with possible upgrades to roads, bridges, and transport systems that improve connectivity within the country and across borders. The energy sector could also benefit, particularly in renewable energy projects such as solar and hydropower, which are critical for addressing electricity shortages. Another area likely to see impact is agriculture, where resources may be directed toward irrigation systems, technology adoption, and research programs aimed at reducing vulnerability to drought. In addition, digital transformation and public service modernization may receive support, aligning with Zimbabwe's push for improved e-governance. The health sector could indirectly benefit if resources are allocated towards strengthening facilities and medical supply chains. These investments not only address immediate needs, but also contribute to Zimbabwe's long-term economic resilience, ensuring that the grant extends beyond short-term relief and into sustainable national growth. Impact on trade and bilateral cooperation. The Zimbabwe-China agreement goes beyond financial assistance. It has implications for trade relations and bilateral cooperation. By securing grant-based funding, Zimbabwe strengthens its position as a reliable partner for China in southern Africa, a region where mineral resources, agricultural potential, and strategic location make it attractive for global powers. The deal signals Beijing's intent to maintain long-term engagement, which may lead to expanded investment in mining, manufacturing, and export-oriented industries. For Zimbabwe, stronger ties with China open avenues for preferential trade access, technology transfers, and market opportunities for its agricultural and mineral products. It also creates room for more joint ventures between local enterprises and Chinese firms. On the diplomatic front, the agreement deepens mutual trust, reinforcing Zimbabwe's alignment with China on key global issues. Ultimately, the cooperation strengthens not only trade flows, but also broader political and economic integration, cementing China's role as Zimbabwe's most consistent and influential partner on the global stage. The symbolism of all-weather friendship. The phrase all-weather friendship has become the defining symbol of relations between Zimbabwe and China, reflecting consistency through changing global conditions. Unlike partnerships that fluctuate based on political or economic climates, this phrase signals a stable and enduring alliance. For Zimbabwe, the symbolism reinforces a sense of diplomatic security, especially when Western countries impose restrictions or remain cautious about engagement. For China, the term projects its commitment to supporting Zimbabwe not only during periods of prosperity, but also in times of economic hardship or political pressure. This symbolic narrative strengthens Beijing's reputation as a dependable partner on the African continent. It also highlights how the relationship extends beyond financial agreements into cultural, educational, and political dimensions. By framing the new $55 million deal under this enduring friendship, both governments send a message that their cooperation is anchored in loyalty, mutual trust, and resilience. The symbolism thus carries weight far beyond economics. It embodies a shared historical journey and a strategic vision for the future. Regional and international reactions. The $55 million agreement between Zimbabwe and China has drawn attention across Africa and beyond. Regionally, neighboring countries see it as a sign of China's increasing influence in southern Africa, reinforcing its role as a dominant player in infrastructure and development financing. Some African nations view the deal as a model, demonstrating how partnerships with Beijing can provide grant-based assistance instead of debt-heavy loans. On the international stage, reactions are more mixed. Western powers often view China's deepening presence with suspicion, framing it as a bid for geopolitical dominance in Africa. International financial institutions may also interpret the deal as Zimbabwe seeking alternatives to traditional lenders such as the IMF or World Bank. At the same time, global analysts recognize that Zimbabwe benefits from diversification of partnerships, gaining leverage in negotiations with other states. These varied reactions underscore how the agreement is not just bilateral. It's part of the larger contest over Africa's development trajectory in a shifting global order. Future outlook of Zimbabwe-China partnerships. The future of Zimbabwe-China relations appears set for further expansion, with the $55 million agreement marking only one chapter in a broader story. As Zimbabwe pushes forward with its Vision 2030 plan to become an upper-middle income economy, China is likely to remain a key partner in infrastructure, technology transfer, and industrialization. Potential areas of collaboration include green energy, digital innovation, agriculture modernization, and mining investments, all of which align with both countries' strategic interests. China's Belt and Road Initiative will also continue to serve as a framework for enhancing regional connectivity, positioning Zimbabwe as a potential hub for Southern Africa. However, the sustainability of this outlook depends on Zimbabwe's ability to maintain accountability, equitable resource distribution, and transparent governance. If managed well, future agreements could strengthen economic resilience and provide long-term growth. If mishandled, they risk fueling dependency. Overall, the outlook suggests a partnership that will remain central to Zimbabwe's development trajectory, reinforcing China's role as its most consistent international ally. This $55 million deal isn't just paperwork. It's a signal of growing power dynamics and shifting partnerships. As Zimbabwe and China move closer, the big question remains: how will this shape the nation's economy, trade, and future? Stay tuned for more updates on global shifts that matter.